Hi, folks. Welcome to my podcast, The Way I See It. My name is Kalu Aja, and well, the Nigerian 2024 budget has been passed. So, good job. But now the real work begins. I want to take a look at the metrics, we say the macroeconomic indicators from the year 2022. Let's just pick December, say last day in December in 2022 and compare it to December 2023, just to have a sense of the scale of work that this administration has in front of them, and to sort of lay the framework for what Nigerians will start to see in the economy going forward. It's not a pretty picture, so let's take it one by one. Inflation a year ago was about 21%. 21% a year ago, that's December 2022. Today it's about 28%. 28%. So if you had money in the bank, if you were on a fixed income like a pension and all that, you've lost purchasing power. And it gets worse if you look at the food inflation numbers. 24% December 2022, now 32% December 2023. Why is this important? Like we said, you've lost purchasing power, but it destroys any idea of savings and planning. I mean, how can you plan with 28% inflation? What's your bottom? What's your hedge? It's difficult to incentivize savings, and if the economy doesn't save, then of course the economy doesn't have disposable funds that borrowers or lenders can interplay with and create wealth in the economy. So big problem there in terms of inflation. What about the exchange rate? Exchange rate to the dollar a year ago, 461. Today is about 907. So a big jump there. The jump, of course, is explained by the float of the naira, in which case the peg was removed. If you want to say it clearly, you would say the subsidy on the dollar was removed. Hence, the naira is reflecting its real exchange rate. Again, 907 is the official, the CBN average price on the streets of Lagos and the streets of many states in Nigeria. The dollar goes for about 1,200, about 1,200 per US dollar. So it's very weak, and it reflects the lack of supply of dollars officially into Nigeria. So very, very weak there. Let's take a look, should we say, at the GDP or the GDP growth rate. How much output is Nigeria producing? A year ago, we were at 3.54 growth. Now, December, we're at 2.54% growth. So growth has stalled. Why has growth stalled? The Nigerian economy is not really an oil-driven economy. Oil is about less than 15% of our GDP. But the trade, the telecom side, those have been hit hard by the lack of purchasing power of Nigerians. We've seen many multinationals leave Nigeria. And also agriculture has stalled with the insecurity in the food baskets in Nigeria. And that's what you're seeing reflected in the GDP growth numbers. The largest contributors to GDP, agriculture, trade, telecoms, have really not posted stellar returns. The returns are coming from, say, banking and all that. And while that is good, their contribution to the overall economy is not as large as the agriculture. So you're seeing those numbers not showing up into the GDP growth as we should want them to. Remember, Nigeria is the largest economy in Africa. The population grows about 3% or so. So we should be growing more than the population to just keep pace and create jobs for the new Nigerians, as they say. So disappointing numbers there in terms of GDP growth. What about external reserves? This is the claims on imports, right, that the Central Bank of Nigeria manages. So these are when Nigeria sells crude oil or Nigeria exports, reserves get built up. And those reserves are held or managed by the Central Bank of Nigeria. Last year, we were about 37 billion US dollars. Currently this year, we're posting about 32 billion. Again, if you've been following and you've seen the report that JP Morgan has done on the reserves, how most of those reserves have been spoken to or tied down by borrowings made off balance sheet by the Central Bank of Nigeria in terms of swaps and in terms of forwards that have not been cleared, you would then see that this 32 billion, if you netted it off those claims that we haven't seen materialize on the books of CBN, we're looking at anywhere from 3 to 4 billion, which is really quite dangerous for an importing heavy nation like Nigeria. So again, flag there. What about interest rates measured by the monetary policy rate? A year ago it was 16.5, today it's about 18.75. So it's gone up. Of course, it's gone up because the central bank has got to fight inflation by increasing interest rates. But what that does mean, is that SMEs, small and medium-scale enterprises, will then struggle to get cheap funds. At 18.75, you would borrow at anywhere in double digits, 22, 23, making it extremely difficult for the small-scale enterprises to borrow. I mean, credit to the private sector is up. It's up from 41 trillion last year, December, to 58 trillion this year. So it's up, but the cost of that credit is now up. And hence, if you then look at the Purchasing Managers Index, last year 53, now 48, the PMI is telling you, or it's an index of how the purchasing managers, what level of confidence do they have in the economy. So if they are buying more stuff, they have a higher level of confidence. But the numbers at 48, it seems the confidence of the purchasing managers, the manufacturing purchasing managers, is not as high as it was last year. I mean, if you look across the board, what's the one area you could say, okay, let's point to and we're doing pretty good? You could say the Nigerian stock exchange capitalization, right? Last year about 27 trillion, this year about 40 trillion. Nigeria is top 10 in terms of capital market capitalization. So that's a big positive. But then you want to ask yourself, how much of that is driven by organic growth, or how much of that is driven by the devaluation of the naira, which then means that a dollar coming in can buy more. But still, it's positive. It's one sliver of good news that we have. Then, of course, the last indices I'll just point out, and it's I would say the most important, right, is the crude oil production numbers. Last year we were about 1.19. Now we're about 1.25 million barrels per day. Significant increase, but still nowhere near the 2.2, 2.3 million barrels a day Nigeria was posting in 2005 and all that. This is very important, because without crude oil being exported to generate foreign reserves, Nigeria's foreign reserves cannot rise. Our ability to, should we say, lower the interest rate, to, should we say, fund the imports, to begin to affect the exchange rate becomes very limited. The Nigerian economy is facing two serious headwinds, and number one is lack of forex into the central bank because crude oil production is down, and number two is food inflation. And these two very sticky chains that hold down the economy have to be broken before the budget can then start to see or have a positive effect in the economy. If we're unable to break these two, i.e. Low supply of dollars and high inflation, it becomes a drag on the economy as a whole. It restricts the effectiveness of the trillions that are going to be spent by the administration to grow the economy. So these two things have got to be priority number one. I think the point here is that there's a lot of work ahead of this administration. They don't have the time. They really have to hit the ground running and start to reverse and post better macroeconomic numbers, which will then attract foreign direct and foreign portfolio investments, which hopefully should create jobs, boost consumption, and then start the process in Nigeria of fixing the economy that has really been on the back burner for a few years. All right, folks, that's our show. Thanks so much for listening. Again, my name is Kalu Aja. I hope you guys would follow the podcast. Let's Talk Less the way I see it, available on all podcast channels. Do have a good day, and bye.